Hello subscribers, welcome to the Fast Profits Daily. I'm Brijesh Bhatia. This is the follow-up video of the IT sector which I have been recorded as a Diwali picks on 21st October 2022. In case you haven't watched my video, go on to our YouTube Equitymaster channel. Just browse the 21st October or probably the 3 months old video and just check out my Diwali pick. So I have highlighted PSU banks and IT sector. Then when in the rally has just began into the IT space. And if you look at the topic, it's pyramiding TCS and Infosys for trading gains. Now, what is pyramiding? Well, everyone has heard about the averaging. Generally, there is a tendency into our traders and investors that when the prices go lower, they tend to average. Traders, when they buy for a trading stocks for their trading, and when they go down, it has been converted into an investment. Well, most of the traders have gone through this phase, and even I have gone through this phase, so no shame in saying that. But yes, it is a hard-earned learning, I would say. If I just look at what is pyramiding, so as I said, averaging when prices go down, you average the cost. So in case you bought at 100, price goes to 90, you buy some more. When price goes to 80, you buy some more, and that's the averaging phase a trader or an investor does. Pyramiding is exactly opposite to it. So if in case I'm buying 100, at 110 I'll buy more, at 115 I'll buy more, at 120 I'll buy more. Now the advantage of pyramiding against the averaging is that as soon as you're buying or pyramiding the stock, uh, the second leg of buying is in the money, which means that so if in case you bought at 100 and you bought at 120, your average comes to around 110. The current market price is 120, so it's still a profit of 10 rupees per share for you. In case of averaging, if you're buying at 100 and you bought another leg at say 80, your average is 90 and current market price is around 80, so you are already into a loss of over 10%. So that's the difference into pyramiding and averaging. So I generally prefer pyramiding rather than averaging, and I never look for an averaging a stock which is into a negative portfolios. Pyramiding gives you an extra edge, which means that the stock is into the momentum, the stock has a strength, the stock is rising, and all sort of the bullish momentum is there into the stock, and that's the reason I do pyramiding. Now, as I said, this is a follow-up video of the video which I have done on Diwali picks, and I have highlighted that the IT sector could see a huge comeback. And 3 months down, just look at the prices of the IT stocks. They are, or even look at the IT index, which have seen a huge comeback. In a percentage term, we have seen more than over a 10% rally into the IT index. So let's start with the first chart of the Nasdaq over here. Now again, if you remember, I've done a similar chart, and if in case if you are following me on my Telegram channel, Fast Profits with Brijesh, I have posted this chart n number of times where I have highlighted yes, Nasdaq is forming. The structure development have been posted regularly into the my Telegram group. Now again, I am highlighting this same chart which I have posted in the previous video of October. Now look at this, the Wyckoff theory is in place. And if you look at the springs which have been done into the October, mid of October, that's the reason this was the first setup which I have thought that yes, the Nasdaq is bottoming out, and that could lead the IT index higher. Now we saw a rally into the ITX into the Nasdaq in October and November first week. We saw a dip. November and it rallied. December or probably start of the Jan, we saw again Nasdaq slipping downwards. But yes, it maintained that October low. It didn't break the October low, and now right from around 10,800 we are trending at around 12,700, 12,800 on the Nasdaq. So around 2000 points rally into the Nasdaq already there. So look at the structure. I think yes, this structure, if I just look at the LPS, which LPS1 and LP2, which is last point of support, and as per the Wyckoff theory, after a spring there is a last point of support where markets take a dip. The traders or investors feel that the bottom may break out or break down onto the downside. But yes, the lows are being held. The spring lows were held right around the October lows, and we saw a sharpened momentum into the January month. Even Fab has started with a positive onto the Nasdaq, though there is a slow and steady momentum, and that's the excellent thing. When the slow and steady momentum are there, there is a breadth-wise, market breadth-wise participation of most of the IT stocks. And if you look at the Nasdaq, we saw Tesla coming back very, very strongly. We saw Google coming back very, very strongly. Amazon coming back very, very strongly. And we have seen round the corner each and every stocks participating in the current rally. Well, if I just look at the second chart, which is the IT index over here, similar structure. We saw, if you look at the green line on the bottom, we made a marginal low into the September and October, probably first week. A marginal lows, and we have seen a fast recovery. Importantly, we are on a verge of giving a golden cross. So if you look at this green moving average, which is 50 days exponential moving average, and the red, if you look at, it is the 200 weekly 200 days exponential moving average. Now the golden cross is basically when your short-term moving average is the 50 crosses above the 200 days exponential moving average, is the long-term moving average. So in June, when the markets were May June, when markets were falling, the IT index was struggling to go higher. We saw the death cross, which is exactly opposite to the golden cross. It is a sign of bearish trend, the death cross, whereas golden cross is a sign of bullish trend. Now, if you look at after a divergence of two averages, they are now converging, which means that both the average are coming narrower and narrower. And probably we may see this positive crossover, which means that the green average may cross over about the red line. Again, a sign of positive momentum. Now, if you look at the two blue lines, which are the previous highs around, if you look at around 30,600 and 31,200 levels, these two have a minor resistance over here. But there could be a dip. Probably we may see around 30,500, 30,600, and we may see a positive comeback coming back very, very strongly into the IT index. But yes, the golden cross may add the fuel to the rally. And after probably May, June 2022, for the first time, we may witness a golden cross coming onto the IT index, which is again a positive sign. And this will lead to a positive structure onto the higher side. Now, what could lead the rally? As I said, TCS, Infosys could be the one. And if I just look at the constituents and weights, with the largest to smallest, Infosys with around 27.35%, TCS with around 26.5%, LTN Mindtree, because LTN Mindtree both were around 5.5%, combining both, which is around 10.71%, HCL Tech with around 8.5%, Wipro with 8.29%, Tech Mahindra with 8.27%, and the list goes on. Now, if IT index has to go higher, probably top 3 or top 4 has to lead the rally, which constituents around, if I just look at around 65-66% of the weights are from the top 4. So if in case this 4 leads a rally, IT index may see a positive momentum. So let's start with the first, the top of the order, 27.5% Infosys. Now, if you look at this Infosys structure, this is the first indication the golden cross is there onto the Infosys with around 27% weights. This stock is giving a golden cross, which is a positive. So in probably start of 2020, we saw a golden cross. Again, stock going on to the downside with the death cross. But yes, the death cross was slightly a smaller period. But if I just look at the momentum, yes, the stock is trending higher and higher. If you look at these three black horizontal lines, the lows, as I said, the marginal lows were there. As per the Wyckoff, generally the marginal lows are known as the shakeout or spring. And the similar structure is witnessed in Infosys as well. We saw prices going higher, a dip towards where again the similar structure happened. The previous two supports were there. Prices broke the support and came back very, very strongly. Now, again, the third time the support line has been held and the prices are going higher and higher. So I believe Infosys with 27.5% leading the rally. Golden cross is there. We may see a positive momentum. Though 700 might be a minor resistance zone over here. But yes, the structure seems a positive side. If you look at the pattern wise, the supports have been held. Golden cross is there, and which may lead the Infosys, which will lead the IT index by the Infosys. Second, with around 26.5% weights, TCS. Now, importantly, TCS is the one which has led the rally by a big margin. Look at the lows were around 2900. We've seen a similar. The springs have happened. The prices went lower. I get 288689 was the low, and from there we have come back to around 3500 levels. Now look at the structure over here. The previous two highs which have been onto the IT index, the similar highs have been taken out by TCS. Golden cross, a positive structure over here. So now 3400 may act as a major support area for TCS, and in case there is an entity dip into the TCS around 3400, definitely one should look at this stock. And definitely I would say, if in case there is a reversal, you should add to your watch list. The TCS will be the one which may lead the rally. There is around a percent difference into the weights of Infosys and TCS. But if you look at the TCS structure wise, it even has a good hold into the Nifty 50 as well, and Infosys as well as a good hold into the Nifty 50. So if in case TCS and Infosys, we may not only see that IT index rallying, but also we may see that Nifty heading higher levels. Third, LTMI, which is again, if I just look at the LTI plus Mindtree, look at the structure over here. Uh, though this is not more convincing than what the TCS and Infosys are showing, it has been registering around 200 days exponential moving average. Though, but if you look at the two black lines over here, the support has been held. The support from the 2001 has been held right now as well. So resistance of 2021 acting as a support in 2023. So this will be very important how this pans out. 5000 I think will be minor resistance zone. If in case that is taken out, we may see a faster rally coming into the stock. But yes, keep a watch on this stock. This is very important to keep a watch. Which around 10.5% weights. It has to lead the rally to take the market higher, or if would say the IT index higher. HCL Tech with around 8.4% weights. Very bullish chart. Look at the structure. Golden cross, the one. Prices are surpassing the previous highs as well. Third, the support heavy acting very strongly. So I feel with 8.5%. So if I just look at, apart from LTI, which is around 10.5%, Propus has 10.7, 27.5% on Infosys, 26.5% on TCS, 8.5% on by I would say the Tech Mahindra. So around 55-57% of weights, indicating that the structure is very bullish, and which may lead IT index onto the higher side. I'm not looking at the lower of like Coforge and LTTS, which have the or even Infosys, which have the weightage 5, 6, and or probably 2-3%. But if I just look at this structure, apart from LTMI, or probably LTMI may see a faster rally, because this it has a tendency to rally in a faster pace after a consolidation. So if in case it joins the hand, we may see a faster rally coming into the IT index. But yes, IT index has a minor resistance, but I think the trend is changing for the IT stocks. And TCS, Infosys, HCL Tech seems a pyramiding, I would say, onto your portfolio. So TCS, as I said, it's breaking out. 3400 will be now a major support area onto the stock. And definitely, as an investor, you should look for a pyramiding into these stocks, where I think that IT index is could be the index for the year. And if we remember, as I said, Diwali pick was my PSU bank and IT index. We have seen a PSU bank rallying. IT could be the one which may see 2023 a positive side. So keep a watch on these stock on this sector. Definitely a pyramiding into the TCS, Infosys, and HCL Tech may help to gain the high trading returns. Signing off, Brijesh Bhatia.